Options trading may seem overwhelming at first, but it is very easy to understand if you understand a few key concepts. So what is an option? An option is a contract giving the buyer the right to buy or sell the underlying asset at a specific price, on or before a certain date. Options give buyers the right to buy or sell. To exchange for the right, the buyers need to pay premium. A stock option contract typically represents 100 shares of the underlying stock, but options may be written on any sort of underlying asset, from bonds to currencies to commodities. There are two kinds of options, put options and call options. Call options are contracts that gives the option buyers the right to buy. At the same time, option sellers have the obligation to sell underlying stocks to sellers, if sellers exercise the right. Put options are contracts that give the option buyers the right to sell. At the same time, option sellers have the obligation to buy underlying stocks from sellers, if sellers exercise the right. Now let's get familiar with a standard quote on an option. ABC is the stock ticker, tells us the underlying stock you are going to buy or you are going to sell. December 26, 2021 is the option expiration date. Buyers can exercise the right on or before this date. 100 is the strike price you want to buy or you want to sell. A strike price is the pre-agreed price per share at which stock may be bought or sold under the terms of an option contract. Next part is the type of the options, either call or put. In this example, it is a call option. The last part is the premium or per share cost of the option, the dollar the buyers need to pay to the sellers. Remember that each option has 100 shares. If the per share cost of the option is $5, the total cost of the contract is $500. Please subscribe to my channel to learn more about stock investment and trading. Also click on the bell to get notification to catch my latest videos.